welcome back to my channel. If you are new here, my name is Sarah Sperber and I am a realtor in the Northern Nevada market. And on today's video, as I do every single month, I'm going to be giving you our data deep dive in our MLS. They publish the data at the end of each month in arrears, so we can take a peek at that. And as always, if you stay until the end, I will be giving you my predictions for what all of this means and what it means for what's to come, and also, of course, my advice for both buyers and sellers. So don't go anywhere. We have a lot to talk about today. So some of these numbers surprised me, and I think we need to preface this whole thing by saying that despite what the media told everyone, mortgage interest rates did not come down. Well, they came down. They did come down. But unfortunately, they've gone back up, and it's not really the picture that was painted. And so if you guys remember the last month and the month before that, I did say we've been lied to before, so don't take this as gold. And here we are. I feel like we've been lied to yet again because rates have gone back up. At the time of filming this, they are in the mid to high 6% range for a 30-year fixed conventional loan. What I'm going to focus on today is the data, which is a little bit surprising, but keep in mind these are lagging metrics, meaning these are looking at a month in arrears, but also they're based on homes that sold. And if you think about, the average timeline for escrow being in our market an average of 30 days or so, that's telling you kind of what the market conditions were 30 days in arrears, if that makes sense. If it doesn't make sense, you can reach out to me. There's a link in the show notes below where you can book a call with me. We can talk data, we can connect, but I'm going to dive in, so don't you go anywhere. All right, let's start with median sales price for the closeout of the month of October. This landed at $589,000. This is an ever so slight increase month over month from the closeout of September, only 0.3% higher, so really not a whole lot there. And it's only 2.4% higher than it was a year before that. So not a whole lot to talk about there, but let's keep going. Number of closed sales also barely increased by 2.4% month over month and 21.2% year over year. Now, I have to say, on the ground, it did feel like things slowed down significantly, or they're slowing down right now. And I think a lot of this, as I mentioned, rates did drop down in September. Rates were a lot better than they had been in, I think, 18 months or something like that. So a lot of buyers re-entered the market. We were seeing a lot more activity, and we were all hopeful that this was going to be a busier than usual Q4. And now that rates have gone back up, we're about to find out the results of the election tomorrow. So you guys are getting that I'm filming this, batching it, getting it edited, and then getting it back. So by the time this publishes, we're already going to know the results of the election. But there's been a lot of uncertainty there. And then with rates going up, I do think if we look at our metrics at the closeout of November, we're going to see a lot of these numbers slowing down, cooling off. All right, I'm going to keep rolling. Here's one that kind of does speak to all of that. Median days to contract did increase by nearly 14% month over month, landing at 33 days. So if you don't understand that metric, it is the timeline from when a property hits the market to when an offer is accepted. So 33 days is our median in our market. This is a 20% increase year over year, though. That's super, super significant. And it's kind of hard to believe that a year ago, when everyone was saying, just hold out, this market can't get any worse. Well, here we are, and the market has slowed down even further. Percent of list price received. Now, if you don't understand this metric, that's basically what a seller lists their home for and the percentage of that they get at closing. That did not change at all. I always talk about how this is the metric that changes the least in our market, it seems. But as long as listings are priced appropriately, typically sellers get pretty close to what they're asking for, and that number came in at 98.6%. Again, no change month over month, and a 0.1% increase year over year, so really nothing that significant. Median sold price per square foot decreased ever so slightly, only by 3.7% month over month, landing at $316 per square foot. This is a 2.3% increase year over year. So a lot of people ask me, why does the median sales price go up and down, and then the price per square foot doesn't always reflect or doesn't move the same way. And it's because we're talking about the median. We're not talking about the average. If you don't know what that means, you can Google it, but that would be why, my friends. The two numbers don't always correlate. Number of new listings decreased by 5.8% month over month and increased 28.8% year over year. That's pretty significant. Number of new listings has decreased month over month, but significantly increased year over year. However, our timeline for those getting under contract has drastically changed in that it's taking longer now than it was a year ago. Active inventory has gone down by 6.5% month over month, landing at 1,014 active listings in our market. We've had a scarcity issue in our market for quite some time, and that has not changed. In fact, I think that is probably the only thing that's kind of protecting us from a huge issue with these mortgage rates being high. But with that, because the rates are high, it is weeding out a lot of the people who would like to be in the position to buy. So here's the thing, and I've said this for the last, I don't know, year to 2 years, is that when these rates do come down, which we're being shown yet again that we don't know when that's going to happen, but when they do come down, this market is going to be flooded. So I'm going to get to some buyer advice in a minute and seller advice, so stay with me. But I will say, if you're thinking about buying, there's not going to be another time like this likely for a while where you can get the kind of deals that are available right now. But let me explain what that means in just a minute. I only have one more metric to share with you before I can get into my advice part of this video. Month supply of inventory decreased significantly by 8.7% month over month and decreased by 5.5% year over year, landing at 2.4 months. So what that means is if no new listings came on the market, it would take only 2.4 months to sell all of the active listings in our market. So let's get back to the advice that I touched on, but I'm going to dive in a little bit further. When rates come down, all those buyers who have been suppressed because they can't afford to buy, they re-enter the market. I read a statistic a while ago. I'm going to butcher this, but I think it's for every 1% that mortgage interest rates decrease, 1 million more people, and this is a nationwide metric, but 1 million more people can afford to buy homes. So when you think about how much more competition that will bring into the market, it's going to drive prices up and it's going to cause a situation wherein sellers are less likely to give concessions. Rarely in a market do you win on both sides, right? Usually things are going to be in favor of either the buying side or the selling side. And so right now, buyers who are entering the market, and granted, a lot of people can't because of how expensive it is to borrow money, but those who are getting some amazing concessions. We are seeing price reductions like crazy, like things I haven't seen, I think, ever since I started my real estate career. Like sellers are offering big cuts on prices. They're offering credits. So if you are financing, they're offering money that you can use to buy down your interest rate. So we're seeing price reductions. We're seeing seller credits. We're seeing sellers make repairs. This home that I'm sitting in right now, the sellers agreed to every single one of the repairs and also gave us a credit. So you can pretty much leverage the conditions right now if you are buying. Once we have more competition entering the market, that's going to change. Once we see it shift back into a strong seller's market and it's super hot, we're going to start seeing bidding wars and multiple offer scenarios. I mean, we saw this just as recent as September. I had buyers I was working with and we beat out two other offers on a property, and it did get into a bidding war. So just these little nuances with mortgage interest rates, they have a huge impact on affordability, competition, and which way the market kind of leans. So just keep that in mind. All right, let's talk about the seller side. If you are a seller, it's not all bad news. Like I mentioned, the scarcity factor is at play, right? Number of new listings is down. So if you are thinking about selling, you have a lot less competition on the selling side. There's a lot less inventory for buyers to be choosing from, which means that your listing has a higher probability of being shown, of getting traffic, getting offers, all of that. So it's not bad news for you. And that list price received is still at 98.6%. So that means you just have to price it appropriately and you have to market it correctly. You want an agent who's not just going to throw it on the MLS and call it a day. I could go on and on about listing homes. I love working with buyers and sellers just like you. So if you are thinking about making a move in real estate, I would love to connect with you and be of service to you. At the very least, to get all your questions answered and help you devise a strategy. So you can book a free call with me. There's a link in the show notes below to do that. You have access to my calendar, so just go ahead and book it when it's a good time for you. And if you haven't already, I would really appreciate it if you would smash that like and that subscribe button. I put out new videos every single week about the Northern Nevada lifestyle, the Reno-Sparks housing market, and of course, everything to do with buying and selling real estate. Thank you guys so much for joining me, and I will see you next week.